Roger, thank you very much for joining us this morning. Let's talk about whether the Fed is doing the right thing by raising interest rates at this point, given the uncertainties we still have with Russia and Ukraine.
So I think the answer is yes, the Fed is doing the right thing by raising rates at this point. Recognize that inflation is a clear and present danger. It's a problem for Wall Street. It's a problem for Main Street. And I think it's an important element of the Fed's mission. In fact, they've got a dual mission, is to keep inflation low and stable. So they've got to move. Having said that, and you saw it in Chairman Powell's testimony, the word uncertainty features prominently in their thinking, I'm sure. And I think the way it will play out is perhaps the pace will be a little slower, and they'll be very focused on incoming data to guide them. But they absolutely have to move now to maintain credibility and to be consistent with their mission.
You know, what's interesting about that, Roger, is that there is no uncertainty at all with regard to this rate decision coming up here, pending any kind of really, really drastic macroeconomic condition changing. Fed Chair Jay Powell told Congress it's basically 25 basis points. He's recommending it. It's probably going to happen. What exactly then does that do for the Fed's calculus going forward? Does the Fed have the runway to be more patient with these 25 basis point hikes? It wasn't that long ago the markets were pricing in a 50-point hike for its first one in March.
Well, first, I think when you're prepared to do liftoff after, if you say, so many years, I think it's really important to not surprise markets. So clarity of message, and Chairman Powell delivered a very clear message, as you point out, is, I think, a plus. Secondly, they still do have an awful lot of credibility, for sure. If one looks at the market expectations for inflation out a bit, not in near end, but out, it starts to come down to that 2% number gradually over time. So they do have the ability to be a bit more patient here, because they still have a lot of credibility, and inflation expectations, while somewhat high, are really not, sort of getting out of control over the intermediate to longer term. And finally, I think they want to be a little more cautious, a little more patient, more prudent, waiting for this uncertainty to clarify as much as possible. The geopolitical situation both increases upside risk about inflation being higher and lasting longer than like, but also increases the downside risk that maybe the economy, which is in pretty good shape now, slows more than they want. And they risk the other part of their dual mandate, which is around maintaining maximum employment. So I think they're going to be methodical and careful here. This is not a time to set it and forget it, I believe, in terms of monetary policy.
No, there's no autopilot for sure. They've got a very tough market to navigate, arguably the toughest that the Fed has seen in years and decades at this point. I wonder now if the way that you see things, Roger, right now in the macroeconomic condition, there are some signs, maybe just initial at least, that the inflation picture may be easing. I point right now to crude oil prices, which have dropped another $5. Benchmark U.S. crude was $130 plus just within the last couple of weeks, and now it's back down to 104, 105. What exactly do you see in the economy that could point possibly to the inflation picture easing if that were to hypothetically happen?
Well, I think you start at the right place, right? So much of this inflation is being driven by geopolitical uncertainty. Some of it's being driven by supply chain challenges. Obviously, there are labor market issues. So go through them one by one. Geopolitical uncertainty, who knows what's going to happen there? But we fully understand that if this war gets resolved in some way that's market friendly, and you've seen it already, oil prices will come down. And in fact, futures markets in oil do actually expect the price to come down. Secondly, supply chain issues. Those have clearly been made worse by the war that Russia has started in Ukraine. Those will gradually, over time, fix themselves.
Sure.
And then finally, wages, we'll see how that plays out. So there is some opportunity for inflation to temper just a little bit.